Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about ways to exit a trade. So you're in a position and you don't know when to sell. This is a very common question that I've been getting asked, so I figured I should make a slideshow and show you guys. So I hope you guys all enjoy this video. If you guys do, hit that like button, subscribe, and don't forget, if you guys want to learn more about trading, investing, and pretty much how to find undervalued stocks, my approach, everything, check out our school. You won't regret it. We have private live streams, quizzes, lectures, a group chat, everything you guys need to get started with trading. It's an 8-week course. It's not a get rich quick or anything like that. So check it out down below, and you guys can use code CHALLENGE to get 50% off because we're doing a $500 swing trading challenge. So make sure you guys use that code. I'll see you guys in there, and let's dive into it. So ways to exit a trade. So the first way is just having a generic stop loss order. So a stop loss order is an order placed with your broker. So whether it's with Moomoo or TD Ameritrade or Webull. Now this is going to be the order that's placed with your broker to buy or sell once a stock reaches a certain price. A stop loss is designed to limit a investor's loss on a position. So obviously you guys can see this example up here. So if your entry's up here and you're maybe doing you're going in for a breakout trade or whatever it may be, stock starts selling off, maybe you keep your stop loss just below the support line. So as the stock sells off, you can exit, and you guys can see the stock has just continued to sell off. So it prevents you from losing more money with that just certain order type with your broker. All right, so the next one here is a trailing stop loss. This is one that I would really recommend doing. This is the one that I use quite often. So you guys can actually see let me make myself a little smaller so you guys can see. So you guys can see here the entry price if we're doing a short trade. So you would have your initial stop loss, and as the short continues to sell off, so you're profitable, you're moving that stop loss lower and lower and lower. Now there's two ways that you guys can actually set this order type. You can do it with a percentage, so if maybe you'll keep it 2% from the current market price, or you can do it a ratio. So a ratio would be like a 2-to-1 or 3-to-1. I recommend doing the percentage, but overall, it's still a very easy way to help you catch those runners. That's why a trailing stop loss is very important. But this right here explains it. A trailing stop is a stop order that can be set at a defined percentage away from a security's current market price. It moves with the price level. So as the stock, goes up or down, your stop will just continue to move down, protecting profits while eliminating losses. So I highly recommend that, and pretty much all you really doing is just moving it to the nearest support levels. That's a little tip there too. Another one here is an indicator-based exit. So I do this one as well. So this strategy involves exiting a position based on signals from technical indicators like moving average lines, RSI lines, maybe even the MACD line. Now you guys can see this is an example up here. So the entry, maybe you'll just keep your stop loss just below the green moving average line. So whether that's the 200-day or 90. So as the stock sells off like it did up here, you will exit that position on that first initial dip down to prevent losses. So this is a really good one too, and I really recommend it. All right, the last one here that we're going to be talking about is just chart patterns. I don't do this one as much just because there's a million different chart patterns out there. And that's the thing about trading, at least for me. I love the expression MISS, M-I-S-S, make it simple, stupid. Don't overcomplicate things. So recognizing patterns on a chart can indicate the probability, the future of movements of the stock price, like head and shoulders, triangles, or flags. I would recommend just picking a couple, like maybe 1, 2, or 3 of them, and just really dive in on those chart patterns. So I would recommend, like I was explaining, the head and shoulders, triangles, and then flags. Those are really good. And you guys can see this one up here is a double top that I'm showing you, where it hits that recent resistance level twice and gets some sell off there. So these are really the top ways that you guys can exit positions. I would recommend just messing around with this with paper trading. So don't use real money when practicing your exits. Just build up that confidence to kind of figure out which exit you really like. And the thing about trading is maybe one stock you'll do a you'll do a moving average line or an indicator stop loss. Maybe the next one you'll do a trailing stop. Each stock may be a little different, and that's completely normal, but just start understanding the different ways you guys can exit a position. So I hope you guys all enjoyed this, and we'll see you guys in the next one.